What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 26th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm here to answer the ultimate question on everyone's mind when it comes to Bitcoin and altcoins. Is it time to finally go long? Are we really setting up here for our breakout moment after more than 6 months of consolidation of Bitcoin's price, ready to go to new all-time highs? Or are we yet again setting in another lower high and lower low pattern that's going to lead to more volatility and more sell-side pressure? I want to spend some time to talk about what you guys need to know in order to determine this. And outside of that as well, we're also going to dive into the macro conversation, taking a look at stocks and the long-term viewpoint on valuations and monetary policy. What might sound very boring can be very impactful and help you guys to win out in markets. So if you happen to enjoy this video and my rambling, consider dropping a like. As always, it's one of the greatest ways you can support the channel. And let's go ahead and kick things off. So I want to go ahead and start here by just diving straight into Bitcoin, talking about the price action here. Now, so far, while we've made a lot of progress here, predominantly over really 2 trading days back on August 8th, we had this nice 12% move in Bitcoin's price out of that low mid $55,000 range up here to the low $60,000 range. We were to consolidate a little bit, find some support around that 200-day pocket, and come up here and actually escape the upper band of the 200-day pocket and to make another nice 6% move. We are now above all of our key moving averages, which is a great first step here towards showing that sentiment might be changing and that the dip has been bought. That a lot of the sell side pressure, a lot of the exacerbated volume we saw here throughout the early part of August and late July, from continued Mt. Gox sell-side pressure, from all types of different scares around, the U.S. government starting to offload some Bitcoin. We'll talk about all that in a little bit. But the main thing here is that right now, Bitcoin is back above those moving averages. That is a great step to see and a change in the tone of the markets. That being said, as we talk about here in this channel, and as many of you will know if you've watched many of our previous videos, we've set kind of a threshold that we would really only start going long on cryptos if Bitcoin has a weekly and more likely a monthly close above 72K. And there's a big reason for this here, because if you're not looking to trade Bitcoin directly, as I know many of you aren't, most of you are looking to trade altcoins, you want to be able to make multiples on your trades over the next couple of months in the event of an extension of the bull market, we are at a minimum going to need Bitcoin to have the pulse, the acceleration, the momentum, if you will, to get back towards setting in a higher weekly and monthly close than the prior range back here in March. So that's an important thing to keep in mind here if you guys want to know my sentiment here. But that's not the only important thing here, right? That's if things really continue to go well. My point here is that the next step for the bulls, the next step for Bitcoin when it comes to its price discovery for further acceleration, is going to be either turning these longer term moving averages, the 100-day pocket or 200-day pocket as support, or seeing some sort of correction over the next couple days, which wouldn't make me feel concerned or anything, but what I'm going to be watching for is to see if that 21-day pocket, the yellow and green lines, which are going to start accelerating higher over the next week, if they can act as support. Because if they can start to act as support, and that can give us a key sign that it's no longer going to act as resistance, we've got that chance to accelerate higher and get closer to that $70,000 range. The closer we're going to get there, the more attention I'm going to be focusing here on not just Bitcoin, but the altcoin sector, and starting to prepare cash and potentially start building positions. Now, again, I'm not likely going to strike until I see that weekly close above 72K. And yes, that is probably going to mean I'm going to pay a little bit of a higher price. I don't really care though, because what I've seen for the last couple months is 6 months of consolidation. And while you will hear people of various sides of the spectrum, people who are extremely bullish, people who are extremely bearish, will tell you that's a good thing or a bad thing. Some people will say that the monthly chart looks incredibly bullish. We had this massive reversive candle back up to the upside that looks like it could spring up after months of consolidation. Some people see it as, again, continued weakness, that we haven't been able to break through those previous all-time highs. The longest period of time we have not broken through a prior all-time high during a supposed bull market, right? We can shape whatever narrative we want around it. Right now, price action is still pretty neutral. If you've bought over the last couple of months, chances are you're pretty much break even if you're in Bitcoin. But if you're in altcoins, chances are you have gotten obliterated. So again, it's important to understand which corner of the market are you trading. If you're trading Bitcoin, that's fine. Right. If you want to go ahead and start building positions on the anticipation of that breakdown, you want to get a discount here, and you understand that you're not going to make 5, 10x multiples within a year or two, that's okay. Like if you're just looking for, stacking sats and have like the 10-year time horizon, you think Bitcoin's going to continue to expand long term and keep up with the performance of equities, that's fine. We're here to chase really solid returns in trades. And that's not a far out kind of goal. This is where you can really make still life-changing returns in crypto. I'm not saying to long-term invest in altcoins. I'm saying we want to get in and out when it's best to be in the market and also get out when it's time to really get out of those positions. Now, just taking a look here at the data to try to get some sentiment readings in the market. What I'm seeing here across the board when I take a look at the ETF inflows, so this is one of the positive dynamics for Bitcoin, the thing that could ideally help shape the narrative here that institutions are buying up Bitcoin. While it isn't a complete month from the data we have here, we have another week to go, so we're going to see how things go throughout that week. But taking a look here at the data, so far over the last 3 weeks, give or take, we have seen essentially less than 7,000 Bitcoin being added to the entire composition of ETFs. And if you take a look at the international level, this is again just probably the US ETFs here, but if you take a look at the global, it's probably not much better. Usually the global ETFs have been really kind of dry, if not neutral or negative most weeks. So the big thing here I want you guys to again focus on is take a look at the publicly available data. There's a ton of content creators out there who put the time in to track and build these spreadsheets to track the holdings. It's all public information. And we can see here that there's not a massive acceleration here nearly month over month. Now again, if we take this back since January, right, this is coming up here on nearly 300,000 additional Bitcoin added into the ETFs. And this is the real number, not, what all the other ETFs added, because if you exclude GBTC, you're not getting a fair picture. In this case, it does factor GBTC. GBTC has dropped to less than, almost coming up here on a third of what it was before. So overall, though, we can see that in those few months, right, we've come up here in about a little over 7.5 months here, we have had the ETFs, the new ones out there, the BlackRock, Bitwise, Fidelity, you name it, ARK ETF as well for Bitcoin. We've added 300,000, and that's honestly a great number, but the question is it going to be enough to face potential sell side pressure? And this is just, again, a fair warning, guys. So far, we've gone through some of the really kind of, scary things that could have really hit Bitcoin, right? We've had Mt. Gox dropped from 142,000 Bitcoin to 46,000 during the claims process. Now, it's important to understand that does not mean that they've sold those Bitcoin. It just means that users have withdrawn them from the bankruptcy claims process. So essentially, they've been able to regain access to those Bitcoin, probably some additional cash holdings, what people were essentially entitled to from that bankruptcy proceeding. But anyways, that is generally good. That shows that, if, for example, a large chunk of those holders wanted to sell immediately, they're probably out now, and the rest of them, maybe they'll decide at a later date, maybe they need to see how price goes, and they're taking it a bit slower. Irrespective, that is a really good sign to see that has now been kind of cleared through, and the majority of those Bitcoin have now been removed from Mt. Gox, and it's a bankruptcy proceeding. The German government, of course, as we all know, back in July, offloaded its Bitcoin over 50,000 Bitcoin, and the US government had sold about 10,000 Bitcoin here back in August as well. So we had a lot of sell-side pressure, and even with relatively weak ETF inflows in the month of August, and I would say, okay ETF inflows in the month of July, we were able to stomach a lot of sell-side pressure, which I have to say again, hats off to that. That's really great to see. The question is, while it was enough for Bitcoin, for example, we still are setting in those lower lows and lower highs here. This is my point. Well, it is very good to see that Bitcoin is still holding generally neutral since back in February over the last 6 months. With all this excess sell-side pressure coming in, we not only still have a lot of Bitcoin being held by the US government if this continues to dwindle and offload over time, but beyond that as well, you also just have to, at the end of the day, follow what price is telling you here. And what price is telling us right now is there is a pretty equitable distribution of buyers and sellers. And that doesn't allow for trend formation to the upside. And it may not even allow for trend formation really to the downside. It may just lead prices sideways. And that's a really important thing that I think, again, over the last couple of months, that not enough people have preached, because people usually talk, bi-directional. It's either up or down, up or down. What we need to understand is that until we really can see in price manifesting that there's more buyers than sellers, things can just go sideways for a bit, or they can continue to dwindle down if there's more sellers than buyers. It's a very difficult question to answer at any given moment, especially when people are thinking in different time frames. But if you're really talking about the near term for the next few months, it may very well be that Bitcoin doesn't have a significant trend and just continues this slight downward trajectory with no serious trend to the upside. We want to wait until momentum strikes. We want to see momentum come to the market. And I understand I kind of beat it like a dead horse, but if you've been focused on the altcoin space, this is hyper relevant for you, because if you want to make those life-changing returns, you first got to make sure that you're not going to lose your life savings, because that's going to make it even more difficult. You're going to have to work even harder to make those life-changing returns when the time comes, and you may not have anywhere near as much liquidity as you had before, so you're going to be chasing higher gains and being more greedy and not be able to actually really lock in profits. Not to mention, that's hoping that we get this rally. We don't know if we're going to get that. So being a bit of a skeptic here in the early stages, waiting for the market to give you the signs is going to pay forward. A great example here, just take a look at other coin market cap. And you guys remember, right, and I left it drawn on the chart here, but just wanted to have the new value highlighted here. You all know that I basically said I think we're going to get a 50% correction. Right back here in April, we sold our positions right before the kind of flash crash here down to $220 billion for altcoin market cap, 40% pullback, right? The big thing that I emphasized is that we were going to get a retest here. A lot of people thought we were overly bearish of that 200 week. And we not only got that and bounced straight off of it, but we actually went lower again, down to this range, right? Now again, if you bought those flash lows, then you're up here, and if you bought down here, you're definitely up as well. But most people didn't. Most people have been buying in these higher ranges, trying to buy before the breakout happens. It is a big psychological trap. People want to be front runners to the trend, but they don't wait for the vital signs to showcase within price, getting above those moving averages, getting strong weekly or monthly closes that really signal, hey, the bulls are here to stay. The bears can take the back seat, and we're driving the show now, right? You need to wait for those clear signs, right? I don't mean to speak in too much metaphors or like, talk about, oh, we got to chase the hype and stuff, but that's markets. You have to focus on whether or not momentum is actually presenting itself. And when I take a look here, I still see we're getting shot down at the 100-day, which served as resistance multiple times. We didn't even come up to touch the 200-day pocket, which again is lowering here, so it's getting easier to do that. So my goal here is, just like with Bitcoin, to see that not only Bitcoin comes down and tests on that 21-day, but also that altcoins can do the same here. And if we can't make the $200 billion market cap range support, which mind you is still like 40%, 45% lower from those prior highs, I mean, we can get an exact percentage here. Let's see if I'm right on my math. Yeah, about a 42%, actually we're talking about 200 billion. So yeah, I was right, 45% here. Look at that. Nicholas can still do his quick math. I did really great with elementary school math when it came to college and university. I struggled a little bit, all right? I know my weaknesses, I know my strengths. Don't need much complex math here to know, generally speaking, what the market is showing us here. The momentum moving averages showcase here that we've got some short-term resistance at a lower high from the past, right? $30 billion lower. The question is, can we make $200 billion our new support, roughly speaking, that 21-day pocket? If altcoins can do that, if they bounce strong off of that 21-day moving average pocket, and we start coming back up here to test those highs, those relative highs at 220 billion, and those long-term moving averages, I'm getting a little bit interested. And I want to have liquidity on exchanges. I want to, have my scan the market, really find those altcoins that are showcasing strength during that window of time, the early front runners and movers in the market. That's what I'm looking for, right? I know a lot of people have also asked me about Ethereum. And look, I have to tell you guys, man, as someone who was a huge fan of Ethereum in 2018, 2019, I was very early to supporting DeFi as a trend. I had my own crypto wallet back in the day. I really love the narrative of DeFi and decentralized financial services and making them permissionless and building groundbreaking and kind of cutting edge technologies that really push the boundaries of the traditional financial world. Right? I'm all for that. But there is not much going on a fundamental basis in the broader Ethereum ecosystem or in the broader DeFi space. And I promise you guys, I say that as someone who was there during DeFi summer. You guys know it if you were there. I know we've got some long-time viewers on the channel. It's nothing like what it was. And you can see that from the on-chain analytics. Right now, we are still at the same amount of transaction throughput as we had in 2020. right? Not to mention, you can see here that Gwei right now, or the cost of gas on the network, is not even 1 Gwei. Like, and to put that in perspective, right, a swap on Ethereum right now is generally around $1. An NFT sale is $1.50. You know, just doing simple send and receive transactions are a few cents. Back during DeFi summer, during that period of time, block space was so much more in demand. I understand there's L2s, there's all these things, and yes, they set some demand for Ethereum or Ether, the main currency, but it's nowhere near the kind of demand that would allow for Ethereum to really accelerate higher. And you don't need me to tell you that the price has been reflecting that since its highs back in December 2021. It is down 55%. Now, part of me gets really excited about that because I like to buy discounts on plays that historically have outpaced Bitcoin. But the problem here is that whereas we held a clear trend line for multiple years, from December 2016 here towards October 2023, right, for more, I'm coming up on nearly 7 years, right? We have broken that trend line. And I think that this is a sign of the times to come, that people are going to be much more skeptical in the altcoin space because we aren't seeing much fundamental progress. So there's not much for people to believe in, right? Even people who say, oh, you don't need fundamentals, altcoins fundamentals, those two don't go together. You do need something that is going to convince investors and other participants who aren't going to be selling at the highs like you plan to, that are actually like, yeah, I think this could do something, right? So again, beyond the fundamentals of like, you know, really feeling like a bit sad to say that, like, you know, there's not much progress in crypto. I'm one of the probably few content creators out there who will say that out loud, you know, and take that for what you will. But beyond that, as much as I've made wrong calls and right calls, the fact of the matter is, guys, this has been continuing to dwindle down. We have told people to stay away from Ethereum for a long time. And when there was all the ETF FOMO around Ethereum, we said, don't buy into it. There's a lot of supply that's just waiting to be unloaded into the market on an event like that. And that's exactly what we saw. We are lower from when those ETFs got announced that they were approved, not to mention when they started trading. So we're going to wait for some signs of momentum here. I like the discount, but I'm not going to just chase discounts. Discounts can grow into bigger discounts, and you can be caught as the bag holder during those downtrends, and there'll be a lot of volatility and sadness along the way. You got to buy something that has a good 2 to 3 year time horizon, is showing some degree of market leadership. Now, I wanted to go ahead and talk a little bit about altcoins, like specifically a lot of the alt plays, right? So if we're not looking at Ethereum, what are some of the plays we can keep an eye on here? We have our narratives that are really the key staples of this cycle. You've got, you know, DePIN, or decentralized physical infrastructure networks, and AI-related plays. You have meme coins. You also have layer 1 protocols that are always kind of a staple, the infrastructure plays, right? There are a lot of different things that we're keeping our eye on here. Bitcoin infrastructure. And what I'd like to see is that after, you know, just months of just brutal downward pressure, not being able to get above that 21-day, Render against Bitcoin had an explosive move here. Volume relatively weak here. This is the Binance pair against Bitcoin. Maybe people are more trading the dollar pair. That's okay. I'm not going to use the volume metric here. What I care about is, now that we've been able to hold on this short-term moving average, our 4-hour EMAs, I really have this explosive move. I want to see it flag down, have a nice consolidation in the next couple of days, and find support on that 21-day or over the next week or two. If it can do that, right, and we're seeing broader upward swings in the altcoin space and in Bitcoin's getting closer to that $72,000 price target, I'm going to be watching these plays like a hawk, because now we're at a very healthy discount, and there is a chance where even if we do what we did here in 2023, or although we don't have the data here and stuff like in 2021, where essentially we can come up back to the prior highs, right, if not slightly higher, then that's going to be a phenomenal trade here, considering Bitcoin's probably accelerating in price and Render is outpacing, right? So that would be a really nice setup here to get this at like 9,000 sats, or whatever the measurement is. It might be 90,000, give or take, right? But generally speaking, on a nice small pullback here, nice bull flag pattern, that's what I would look for here. If you get that breakout and those moving averages come up to provide the support, then this can really start to whipsaw higher and start real significant trend formulation. I'm not interested in making short-term trades and trying to catch falling knives. Take a look here as well at Stacks, Bitcoin infrastructure, right? Again, Stacks is now at a point now where it's been neutral against Bitcoin since back here in late May. that is great to see that over the last couple months, if you bought into stacks, you're probably up slightly against Bitcoin. This really is a sign here that we're no longer trending downward. We're starting to trend sideways and find general support at that 200 week, right? Similar to what we did back here in December 2023 before the breakout. So I like seeing this. I love seeing we're even kind of testing for the first time since back here in April against that 100-day moving average, albeit at a much lower price range. It's okay. I'm excited to see that here. It's good signs to see. So I'm keeping this on my radar. I want to see that 21-day come up, provide support to give us the foundation to squeeze higher. I brought up again another play back a couple of videos ago, which was Zeta Chain, another Bitcoin infrastructure play into that narrative. I don't think it's anywhere near as strong as stacks, in my opinion, from a fundamentals basis, but also from price actions. We can see this thing has been bleeding since its Coinbase listing. But I mentioned an important thing here. Again, this is a great representation of what I'm talking about, right? Irrespective of whether or not you like Zeta Chain or not, or whether you like stacks or you like meme coins, at the end of the day, we got to focus on what price is telling us. And I shared a kind of like setup that we could look for because there's a lot of strength coming in, good volume for Zeta Chain out of the capitulative lows back in August. And this thing made a really accelerated move here on August 10th, up 38% against Bitcoin. And what I was emphasizing here is that we expected this was going to pull back. There was already some signs of it. So that played out. But what we talked about is watch to see if it can find support on that 21-day moving average. Because if it can, in that yellow and green pocket here, if it can start to do that, as the moving averages are coming up to provide ample support, then that's the foundation where you can test those longer term moving averages like the 100-day, which we have not seen here in the price history. And that's when you again, not only have you revisit the prior highs, but you get above the 100-day, that's when you really got the break. That's when you got the momentum. There's not much stopping it. I think the next thing that could stop it is probably its prior resistance range back in May, right? And the point I emphasized is if it can find support in that 21-day. What happened here? Well, we didn't get that. We came down through the 21-day, and now we're struggling to even hold on it. So this is where, again, something that could have looked great back then, it could have looked like a certain surefire trade for many people. Many people would have jumped the gun and built a position. We're waiting for those initial signs here. So we're not getting caught up in the chop and volatility. We're not sitting around waiting. We're, again, in altcoins, this is different than most markets. It is hyper-focused on momentum. And if you don't feel like there's a crowd of people who are ready to buy the same position that you're looking to buy right behind you, and that people are going to talk about it for the next couple of months more and more and more, then you don't want to buy it. You just simply don't want to buy it. That's just the game of markets here. You got to make sure that momentum's here. Meme coins as well. And Pepe's at a nice discount versus its highs. It's come down about, I think about like 40 something percent here against Bitcoin. Yeah, 45%, 44, right? From the absolute lows, had a nice 54% correction. But still, not much momentum coming here so far. And this is very natural and normal here. Bitcoin usually leads in these initial moves. So as much as, meme coins might be moving up a little bit in dollar terms, they're usually going to be bleeding against Bitcoin. So initially, it's really great to wait to see if there's going to be enough sizable momentum for Bitcoin to really kick off a new bull market, get past the same resistance range of the last couple of months, not to mention the 2021 highs in November, right, which we really haven't left yet. So for me, I really am setting those standards here, just waiting. We're just hanging by a tether here above the 21-day, let alone the 200-day. And we got hit down to the 100-day pocket. Right. So this for me is, again, a little bit worrying that there might be some sideways price action here, and that this might distribute right back down and be kind of like a head and shoulders pattern, which wouldn't be very good. So keep that in mind. Keep cautious on some of the meme coins. With same thing here. Since this thing got listed on the major exchanges, it has been nothing but trouble against Bitcoin. Again, nothing exciting, no new highs since the euphoria back in March. Be cautious about these large caps. Focus on the small caps. Focus on momentum. Use those short-term moving averages, the 9, the 21, and the 50 EMA on the 4-hour time frame like we've talked about. If you haven't already, watch that video I made back a few months ago on how to kind of essentially master trading altcoins, meme coins. If you look on YouTube, go to my channel and you search, or if you search on YouTube's search engine, you type in DataDash, meme coin trading strategy, you should be able to find it. It was a really, I think, good tutorial on really the simplistic basics of how to make life-changing money on meme coins with very little capital risk That's the goal. You don't want to put all your money in the meme coins. You really want to focus on kind of having that fractional exposure and being able to make major multiples, and it makes your annualized returns really good for your overall portfolio if you can nail the moves right. But again, last 7 days looks good here for the broader range of large cap altcoins, right? We've got, again, a lot of plays here that are up over, 10, 20, 30%, all positive signs to see here. But again, if we take a look at the broader sector, right, this is just a little bump in the road here. Last year, meme coins are down significantly from $70 billion here to around $42 billion. Not to mention a lot of people just got chewed up buying around that high range. So it's, again, much higher than, of course, where we were back in, say, 2023, early 2024. I'm not here to negate meme coins have come a long way. I'm just saying, if we take a look at the trend for the last couple of months, we are still lower highs and lower lows. That might start to change though, right? We're gonna watch for those signs, and if they do, then we'll have the confirmation to start making those big bets. Now again, at the end of the day, guys, I really think that while meme coins are definitely a great momentum trade when the time is right, Bitcoin infrastructure is a strong narrative, render as well, I think it is imperative to not sleep on the layer one narrative, which picks up big time towards the end of bull markets as people are looking for new protocols, as more activity ramps up, as more new users come to the crypto space, and look for new, better experiences in the same way we saw Solana starting to replace Ethereum. And Solana itself has some pretty big user experience flaws as well, not to mention, similar to Ethereum, just lacks on a lot of fundamental things like privacy, like being able to build things that you couldn't build on other prior chains in the Ethereum ecosystem. And that's why I definitely recommend you guys don't sleep on one of our partners here in this channel, and that's Outflows. Now, Outflows, alongside Radix, Energy, are some of the few networks that I'm genuinely interested in here. And I only bring them here to this channel, guys, because at the end of the day, I think that this is one of the strongest narratives in the crypto space, but beyond that, it is always one of the most ripe areas for disruption. There are clear lacks of fundamental adoption on the Ethereum network, let alone on Solana as well, which is supposedly this new breakthrough chain. Well, we're seeing that enterprise adoption is still incredibly weak for blockchain networks. We are still seeing a lack of new users, traditional finance, traditional systems integrating into blockchain networks. And there's a reason for this here. One of the biggest reasons that's prevented that is a lack of privacy. And Outflows, being a zero-knowledge network, allows a layer 1 and layer 2 functionality that maintains privacy, and is going to be getting better and better over time, and is going to allow for not only EVM compatible projects that already exist here today to be privacy focused in nature and have privacy features, which they just couldn't have on the Ethereum network or Solana. But beyond that as well, they have WASM integrated, which is the Cosmos SDK. And this essentially is going to allow for a whole range of developers from two of the most popular ecosystems to be able to build exciting applications that are privacy focused in nature for DeFi and gaming, as well as enterprise applications. Now, there's already been a lot of really exciting things. The Outflows EVM, or Ethereum virtual machine. So this is, again, similar to all of the layer 1s, layer 2s, Ethereum itself. It has EVM functionality, but privacy built into it, and not to mention higher degrees of scalability. So this is really exciting stuff here, that this is already going to be rolled out here on the mainnet. There are some details about the kind of rollout phases and the stages around it. I definitely recommend you guys dive into it here. But there are already a lot of really interesting projects that are already going to start rolling out onto that mainnet. You have Pieces Market, which is focused on fractionalized luxury real-world assets. So being able to actually tokenize real-world assets, bringing that already into the Outflows ecosystem, which is a huge narrative, I think, within the broader narrative of DeFi. You have Syncra as well, which we've talked about, which is a major DAO protocol. So starting to have private governance within the Outflows ecosystem for various protocols. You've got things like Web3 gaming on. In this case, this is one of the new projects, or Upcade, that is going to be focused on a variety of different gaming projects where you can earn by playing various games. And outside of that as well, large protocols like Rarible that have integrated with other networks have now integrated Outflows in this case. So this is really exciting to see. And you also have new projects. This is one I was reading into just a little while ago called Pangea. It's a social platform that's focused on rewarding creators and people who are contributing to the network. And I think this is something, again, that's going to be very interesting, because whereas there's been these kind of social projects or social media style projects in crypto before, having additional privacy features, I think is going to be a huge benefit here for for the overall Outflows network and for projects like Pangea. So keep an eye here on Outflows. Again, there are other networks like I mentioned before. There's Radix, there's Energy. These are some of the ones that I think you guys should keep on your radar. And again, at the end of the day, I hold the same principles from like a trading or investment perspective. You got to see the price strength at the end of the day here for these plays. So keep that on your radar. See if you start to see that price strength here, if you start seeing those broader trends, and if you see optimism return to the altcoin space, I think this is one you're going to want to keep on your radar. It's one where I think the risk is much smaller than the greater reward here for the long-term trend. All right, guys. So now that we've talked a good amount about crypto, I want to go ahead and close off here in a summary on equity markets and really the kind of broader trend in assets as a whole. Because while we love crypto at the end of the day, it's fun market to trade. It's where we're really going to make some of the greater returns here in the short term in the event of an altcoin cycle. At the end of the day, equity markets are much bigger and they play into the macro trend. And I know I've talked about this chart here a lot, and I know you guys are, maybe if you watch me every day, you're getting a bit sick of it. No, I guess not every day, but every week. You're probably getting tired of me bringing up this chart, but as I take a sip of water here, I bring it back because it is one of the most important charts in history. A 100-year chart that we have to work with here. 95 years or more we've been consolidating in this upward channel. So yes, assets move up and to the right, but there may be periods of time where resistance starts to play out here. Or we may be set to make history. We may melt up. Now, I understand at the end of the day, guys, you want me to come here and tell you what I think is going to happen. Like, place a bet right now. Are we going up? Are we going to double in the S&P 500? Is there going to be massive money printing? Is there going to be an opportunity to make life-changing returns? Or are we set in for a very heavy correction, the likes of which we haven't seen since the dot-com bubble or back here in 1929? Are we way overpriced for equities? That's a very good question to ask, and it's one that's difficult to answer. But I will go ahead and share today some important hints on what's going on here. And along with that as well, I'm going to share the kind of level in which would get me interested to go long, or a level in which if there is resistance, I'd be very cautious about building positions and probably remain in cash. So let's go ahead and zoom in a little bit here. So we can see this past month was no exception to being a very exciting month. We had essentially in the S&P 500 closed down almost 6 months, 5 to 6 months of price action, and just a matter of a few trading days. If we dive in here to the daily time frame, this really brought us back here to where we were back in April or back in February, right? Excuse me, back in March. And within just 3 trading days, really, like making the majority of that decline. This was off of the unwinding of the Japan carry trade. A lot of people were essentially taking their dollars into Japanese yen, taking out a loan. Sorry, I'll take that back. They were taking out loans in Japanese yen and converting it to dollars, going in and getting the high interest yield in the United States, not to mention the depreciating value in the yen, benefiting the dollar. Or they were taking and buying speculative assets, so essentially free, on what seemed like free money. And then, of course, the currency pair flipped and started to squeeze out a lot of those people, and people either were defaulting or essentially getting a margin call, and that essentially led to this kind of collapse in price. Now we are back shy of the all-time highs in July. And if we take a look at that line from that upward channel we talked about, the number that we need to keep in our mind right now is, roughly speaking, 5,850 to 5,900, give or take, right? If you use the logarithmic function here from those prior highs, that's around the number you're going to get here for that historic resistance. That trend line is relatively accurate here. And we are just 200 points away. To put that in perspective, that is less than a 3.5% move. This is really going to be a very interesting, and I can't echo this enough, this is a make or break moment here where we are going to define the trend for the next few years. It might take a little bit of time, a little bit of chop here for the next month or two. It might not be so dramatic or swift. There might be some volatility at this range. I would expect that. But again, guys, this is where we are going to have a definitive moment to determine whether or not we are getting a melt up. And what I mean by that is if we take it here to the monthly, a melt up would be, for example, I'll even take it here, the quarterly. this would be really where we have massive debasement of the dollar, massive money printing, and we really start accelerating to some big psychological level like 10,000, right? Like some huge money debasement or something, where the S&P 500 really melts up over the next couple of years, similar to the dot-com bubble, or we really start to face stagnation and start trending lower here into our long-term moving averages, like we've seen time and time again, at a minimum coming down here into that 200-week pocket, the orange lines, and the yellow line, the 100-month, right? So that's very important to understand when you get to these moments where history has shown us that equities are trading relatively high here. And historically speaking, this has been a point where prices cool down. But if we take a look here at some of our other measurements, especially around monetary policy, we're going to see something very interesting. Whereas the M2 money supply has remained relatively flat for the past couple of years, over more than 2 years, it's been generally trending neutral versus its historic trend, which was generally more of an upswing, not to mention the COVID stimulus that came in. We put things essentially on pause, and while we never really returned back here to this range, we're now starting to trend higher again, right? Some people have, it's difficult to measure global M2 because you're doing you're accounting for Forex rates, various different central banks, and means of stimulus and ways that central banks interact with global markets and global liquidity. But what we see here is generally an expansion of about $2.5 trillion since back here in June. So in less than 2 months, we've expanded that money supply by a couple small percentage points. Nothing too magical or amazing, but about 2.5%. So this has provided, I think, in many ways, a cushion for equities to continue accelerating higher, and it will continue to do so if it really starts to accelerate faster and faster, right? Again, this isn't anything to take home to mom, so to speak, but this is still something that's interesting that, for the last couple of years, we've been watching in the Dash report these trend lines, and now that we've got a break above that green line, unless this is some short-term deviation and corrects soon after, this could be an initial sign of what's to come. That essentially we are going to try to print our way out of the fiscal crisis that we're in. We're going to try to take advantage of lower interest rates. Essentially the economy is going to start trying to re-stimulate again. We can see here that we are clearly now, at least in the short term, and what I mean by that is over the next year and a half, 2 years, we are on the declining trend for interest rates, meaning that we've broken the 200-day very clearly, the furthest spread for the 200-day, and anytime we really had that in the past, right, a significant set of monthly closes below the 200-day, and when those moving averages started to trend lower, that was your cue that interest rates were over the next year or two going to be lower than where they are at that moment. So I think, I don't know where we're heading to exactly. I think the first level to look for is the 100-month and maybe the lower range of the 200 weeks, so around 3%, for the bonds, essentially U.S. Treasuries. So that's essentially telling us that the Fed funds rate is going to be over the next year or two going down much lower than where it's at right now, around that kind of 5% range. So just keep that in mind here. This is all, again, beneficial stimulatory stuff. And if recessionary pressures don't kick in too much, if we don't have a significant pullback, then in that case, you can really have this kind of Goldilocks period. Right? And this is, again, the melt up scenario here that I want you guys to keep an eye on. Right? Overall, historically, we are on the more expensive end. We are overbought, if you will, versus history when it comes to equities. But doesn't mean the market can't keep irrational for longer, right? We can see that back during the dot-com bubble, the S&P 500, right, was at higher levels than where we're at right now. So it could very well be that with the narrative around AI maybe continuing to stay strong, if we get some major breakthroughs in AI agents or generative AI or maybe AGI, so many people are saying we're just a year or two away from it. I don't think that's the case. But if there's enough hype and hoopla in the markets about that narrative and we get stimulus on our side, then yeah, this could easily come up close to this range. And I'm not saying to speak in absolutes. I'm not saying if you're bullish in this case, you think it's going to go higher, wait until it goes to here or anything like that. I'm just saying that there is clear room here, historically speaking. And we have to keep open to the idea here, right, that this could be an expanding channel, essentially as more value is going from, I think, the more private markets to the public markets over time. there may be, not to mention boosts in productivity. This is a scenario that, again, I think would get the bulls really excited, and it'd be one in which will probably take a little bit longer than that. But going into the next couple of years, that's really the hyper bullish thesis. That's what your Tom Lees are saying, like, the people who are really just betting that AI is just going to continue to further automate things, and that if you don't own NVIDIA, if you don't own the public markets, if you're not passive investing, you're missing out. That's their narrative. So again, I don't want to say that I believe in that, but I do believe that we are at the cusp of a point in which, if we take a look at that long-term channel, it is going to be somewhere close to one of those two scenarios, right? So keep an eye on 5,850, 5,900. I'm not here to just make a big hubla and hype about it. I think this is a very important time, guys. This chart is very significant. The S&P 500 is a great broad measurement. It is the 500 largest companies that hold the vast majority of equity value in the markets. If we start to see stagnation there, it could mean a lot of pain to come. And if we start to have a significant weekly or monthly close above that $5,850, $5,900 point, and maybe get a monthly close above 6,000 points, that could be a sign that something big is about to happen. The money printer is coming on, and the markets are pricing in a monetary debasement, or they're pricing in not only monetary debasement, but also exciting future optimism of productivity and innovation, which would also be kind of cool as well. Be a good opportunity to make some returns in the market. But that's it for today's video, guys. I hope you all have a phenomenal rest of your day, phenomenal rest of your week. If you enjoyed this video, consider dropping a like. I might be making a video on Wednesday, so I'll if I do put it out and stuff, you guys will see me in the thumbnail and stuff. I'm trying to think about some other areas of the market to cover. But that's it for today's main market update. Thank you guys again for tuning in as always. Again, if you'd like to consider dropping a like, make sure to check out some of the updates around Olive Zero. And if you guys like the kind of content here in this channel, if you like my rambling, if you're here at the end of this video still listening to me, you may very well like joining the Dash Reports, our newsletter that we have on the channel. I'll have a link down below in the description. You can get it for less than $1 a day, less than a cup of coffee, much less than a cup of Starbucks coffee if you're an avid Starbucks drinker. So it's a great way to support the channel, all the content we put out. Plus you get a ton of additional things. You get our mid-month webinar. You guys will get the newsletter, which will be dropping in about a week. And outside of that as well, you'll get access to the dashboard discussion group, the trade alerts group. You get access to some of Russ's alerts as well. All kinds of really cool stuff. So that's it for today's video. Thank you all so much for watching. I'll see you guys in the next video. Take care, everyone.